I've explained ratio charts before, but for those who didn't catch it, this is basically symbol A divided by symbol B. It's a way of illustrating the strength or weakness of one item versus another, and sometimes unveiling patterns or cycles or trends that wouldn't be apparent with either symbol by itself. I've got 21 of these. As I go through them, it'll get a bit repetitious, so the speed will increase, but let's begin. We begin with the All World Index divided by gold, which is illustrative of sort of the true value of all world equities. Historically, as you can see, we've had a tendency to top out and drop out. And since 2012, we've been forming by far the biggest of these, assuming it doesn't break out above that pink semicircle, which, believe me, can happen. But as it is now, so far, so good. The Dow Jones Composite divided by the money supply is another way to normalize equity movement. You can see here that we appear to be in the third major reversal of our lifetimes. The first was the internet bubble, the second was the financial crisis, and the third is the everything bubble, the NVIDIA bubble, we might wind up calling it. We are treacherously close to breaking out to the up and out of this thing, as you can see. But let's give it a chance, see if it can sink back into that egg or not. But it's, this time it's different folks could actually point to this. But let's give it a little more time. The NASDAQ composite version of this has broken out. This goes all the way back to 1980. You can see that the peak in nominal terms, that is to say money supply terms, was in fact the internet bubble. A much, much lower consolidation zone and peak was during the financial crisis. Before that, we had a top out here, which began to play out, but thanks to the trillions and trillions and trillions of dollars printed by the Fed and the AI mania, it has defied that breakdown and has been in a strong upsurge since then. This is the Dow Composite divided by gold, switching gears here a bit. And as with the All World Index, you can see it's still forming a tremendous top that started in at 2012. This one's broken out, and this one is the same composite, but instead of being divided by gold, it's divided by the money supply. And it seems to have pushed above that, so it's, it might still fall, but it's definitely kind of ruined a clean top, no doubt about that. This is the ratio of the NASDAQ 100 to the small caps, never higher. Duh. I mean, quite obviously. I don't know what else to say about that. Small caps have been horrible for years, and NASDAQ has been ridiculously insane for years. So naturally, you're going to see that. And to a less degree, NASDAQ 100 compared to the S&P 500. Record high, but not as extraordinary as the Russell. Here is the Russell divided by gold, and in this instance, it's exceptionally weak. You can see how we've never gotten out of that egg, which is my lazy way of drawing a diamond pattern, and indeed it looks like very close to a failure of that broken egg, if you will. Semiconductor divided by the Hindu, duh again, never higher, multiples higher than historical levels. S&P 500 divided by gold. You can see really in gold terms just how blasé the S&P has been. In fact, it sounds crazy, but it's pretty much where it was 22 years ago in gold terms, as Dennis Gartman might say. So yeah, it's a lot less exciting in this style. S&P divided by money supply. This one's been kind of following along nicely in terms of obeying its trend lines. Obviously quite lofty here, but it would surprise a lot of people to know that in kind of normalized terms, we're still lower than we were during the peak of the internet bubble. Here is an interesting one. This is kind of a breadth indicator. It's showing the equally weighted S&P divided by the standard S&P. Very, very weak because a tinier and tinier and tinier quantity of stocks are doing all the heavy lifting. So like, 495 stocks kind of suck. 4 stocks are incredible, and 1 stock NVIDIA is absurd. And so you've got this tremendous plunge and diminishment, which actually, interesting enough, happened in the late 90s too, as you can see. All through the late 90s, even as the market was like blasting to lifetime highs, it just kept plunging. It didn't stop plunging until the market bottomed in the bear market. So, yeah, very interesting stuff. This is the transport divided by money supply. Kind of lofty, which I like because I'm bearish on transports, so that's plenty of room to fall on that one. Here's another breakout. This is the oil index over the money supply. And it had been banging around that channel for decades, and it's managed to push its way outside of that. Here's the Nasdaq Composite divided by money supply. Kind of a broadening pattern there. Still neatly within those lines. And plenty of room to fall if the damn thing ever gets weak. S&P 500 divided by 10-year interest rates, formerly known as the most important chart ever, the MICE chart. And when I originally created the MICE chart, it was just a channel, but it shows what a sea change we've experienced by the failure of that channel, because interest rates had gotten so incredibly cheap up here and relatively expensive here. So yeah, this is what this ultimately means. I don't know, but it's a big change from literally like a half century of channel activity. Here's our old buddy, the XME divided by the GDX. That is to say, the metal miners divided by the precious metals miners. Very cyclic, very long term, and suggesting a pairs trade there of long XME. Long GDX, short XME. Here's gold divided by Bitcoin, kind of asymptotically banging down to flatness, which I think speaks well to gold's resurgence as well as Bitcoin's like the 1,000% gains every year are long gone. Bitcoin's just kind of farting around. It's $10,000 less than it was even 3 months ago. Here's gold divided by the CPI. Pretty impressive because it suggests, long term gold's going to really hold up well and be a great inflation hedge. And a couple of last gold ones. Here's gold divided by the spider, which seems to have bottomed out and is turning around into an uptrend. And then gold divided by the US dollar index. Not much to say about that one. Kind of a lame note to end on. But we'll have to end it because that's the 21st chart. So hope you enjoyed some of these.